So let's get a health check on the state of the industry right now, because I think just taking a step back, looking at some of the Q3 numbers we've seen out of big oil, it's been a pretty challenging quarter. We've seen lower production, lower prices, lower margins as well. Where does the industry stand coming into the end of the year and into 2025?
I think you've got to look at it in two ways. There's definitely an aspect of lower activity levels as we come to the end of 24. And as we look at 25, again, we see 25 being pretty much in line with 24 from an activity level globally. International, still positive. North America, subdued and slightly down, flattish. As we look at the macro trend, though, it's clear that as we go out to the next few years, the increasing energy demand is there, and we're going to see activity continuing to increase as we go forward.
So, Lorenzo, what does all of this mean for Baker Hughes? Because I know coming out of the Q3 earnings call, a lot of talk, a lot of conversation about how you're booking triple digits in Q3 and on track to book $1 billion worth of business through the course of this year. Is that correct?
Yes, that's on the new energy front. And in fact, we have a guidance that we gave at the beginning of the year on new energy for $800 to $1 billion. We are actually at the $1 billion mark already at 3Q, and we expect to be obviously surpassing that as we go to the end of the year. Baker Hughes sees a very good, solid performance in 24 and also continuing in 25. And we benefit really from having two segments that are critical within the energy landscape. One on oilfield services and equipment that's more production levered and chemicals levered with regards to the activity in the fields. And then an industrial energy technology, which is very much focused on compression, rotating equipment, LNG, and all of the new energy aspects as we go forward. So we see the next few years very strong for Baker Hughes.